welcome to this trading video. In this tutorial we will discuss the Pipnotic Trading Protocol. The Pipnotic Trading Protocol is comprised of a few steps which are the outline for this presentation. The first being the rules of engagement, the market environment, we have the market framework, we have trend analysis, momentum analysis, and then we have something I'll refer to as looking ahead. With respect to the rules of engagement, this is simply accepting the market for what it is. If the market is trending up, then we will trade the market as if it's trending in an uptrend. If the market is going down, then we'll trade the market as if it's in a downtrend. This is very important. We have perhaps some subjective expectations to what we would like price to be doing, but this can bring us into a lot of trouble if it is out of sync with what the market is actually doing. So this is very important to be clear on before you move on. Additionally, here we have 3 of the 4 strategies, and if price is showing weakness at a level, then we'll be using the level test strategy. If price is showing weakness after a level breakout, then we'll be using the level breakout failure strategy. And if price is showing strength on the pullback after a breakout, then we'll be looking to trade the level breakout pullback strategy. And so here we will be analyzing price on its approach to a level, on its move through a level, and we'll be making decisions based on what price is doing. We'll be watching this on perhaps lower time frames to gain an understanding into the sentiment. And here we have the strategy for the trending markets. We have our directional correction setups. If the market is trending, we'll trade directional correction setups until the market displays evidence that the trend is ending or has ended. And here you can choose either the standard directional correction or the extended directional correction as specified and outlined in the strategies presentation. To start off with, we have our market environment, which is quite important, and this will ultimately ensure that we are trading in sync with other aspects of the market that are related to the currency pair that we're interested in. So if we're trading the euro, US dollar, or any US dollar cross, and of course we'll be interested in knowing what the equities are doing, the S&P 500, the Dow Jones, for example. And with respect to the sentiment for the coming week or longer periods, there are various resources available that you can study in order to gain an insight into what the big funds are thinking that the various currencies are going to be doing. If you go to pipnotic.com and search for fundamental analysis, you will see a post. In this post there is an array of information and links to financial institutions that make reports about what they think a given currency pair will do. And these are good to read in the morning before you start trading or at the beginning of the week. If we look at the first part of it here, we have the support and resistance, and this is the historically respected support and resistance as we specified in the strategies presentation. Under identifying these levels can be done either manually or using the functionality built into the Price Action Pro indicator. Let's have a quick look at how we can do this. If we have a quick look at the euro-US dollar pair, as this is a pair that we're currently interested in, I'll be using in this example, we can see here that this level here seems to be quite price sensitive over the past couple of days. So price bounced at this level, it bounced again a third time, and then finally broke through. But this 1-hour trading bar stopped precisely at this level, and the open of the next bar opened at precisely this level. It went above, didn't hold, and then moved further low. So this tells me that this level is price sensitive. We can see also it's the bottom of this dealing range here that we can see here. So this is something that we'll most certainly keep an eye on. If we wish to do this automatically, you can use the functionality built into the indicator. Let's see if it'll find this level for us. Yes, we can see that this, let me change the colors slightly so it stands out. I'll change it to a darker gray so we can see. Yes, here we can see that this level here corresponds very nicely to the level that we identified manually. So if you're uncertain about which levels to choose, then turn this functionality on the indicator and more than likely it will identify the level that you should be considering. So here we can see this level was identified both manually via the green line that we drew on the chart, as well as automatically by the indicator, which is indicated here in the gray line that we can see here. We can also do this then we have the technical studies, which is the 7.5. Then we have the technical studies, which is the second half of the market framework. And here again we can identify these levels manually or using the automatic functionality in the indicator. And I have tried to find some levels previously using the indicator, and nothing was really turning up for me. And so what I have done here is I manually drew the Fibonacci retracements. And so from this swing high to this swing low, we have 62% at precisely the same level that we have had our eye on. So this is interesting for us. Something that I have marked on this chart, which I think we should pay attention to on briefly, is we can see here that we have MACD divergence taking place, where we have a swing low here and a lower low here, so price is moving lower, but the MACD is showing a slight decrease in selling pressure. So this tells us that price will go up, which it certainly has here, but we're not sure if it's going to continue up or it's already running out of steam or continue lower now. But this tells us that we have to be a little bit careful, and we are on the hourly chart, so hourly MACD divergence can be quite significant and can really push price for quite a number of pips. And so this is just something that you have to pay attention to when trading. So just keep this in mind when you're trading. And if you have something like this, which tells us that we're having a decrease in selling pressure and we're selling a currency pair, then perhaps manage the position slightly more aggressively. The third step is the trend analysis, and here we look at the direction in which the trend is currently flowing, so we are in tune with the dominant trend. As it says here, it should be easy to spot a trend. We're in a very clear downtrend. Of course, we have the lower highs and the lower lows, which supports our premise to sell. We go to the hourly chart, then we have, let's zoom out slightly, we have this downtrend, of course, and then price dropped, creating this nice price imbalance. And when price is imbalanced, it likes to rebalance before it continues either up or down. And when you have a dealing range like this and price finally breaks, sometimes you will get an extended directional correction. We will have 1-2 swings back to the level before it continues, and this is outlined in the strategies presentation. So this is a nice level indeed. If we do get a extended directional correction back to this level, we will most certainly see a strong move further lower, I think. Let's see what happens over the coming days. With respect to counter trend trades, these should only be placed if there is room to manage the trade. And when you're trading against the trend, sometimes the market won't move enough for you to even reach your first profit. So these are, of course, low probability and high risk, and generally trades I like to stay away from. We have a look at the momentum analysis. Here we focus on the strength of the market on its approach to a level. Are there price imbalances up or around the level that we are interested in? And if we go back to the chart here, we can see that we have a price imbalance here, breaking lower precisely at the bottom of this range here. It comes through here. So we have very strong price projection to the downside, which tells us there's strength to the downside, and so we want to be trading in the direction of the strength and away from the direction of weakness. If we look ahead here, this is where we actually find places where we need to trade. So here we'll be looking for places to put our stops and our targets and our entries and things like this. And here we find micro support and resistance and technical studies, micro trends and momentum studies as well on these smaller time frames. And the second part here is we have to identify our stop. And when we've identified our stop, which we generally like to place somewhere where it is protected in relation to our entry. How far is it away? Can we afford this trade? And if you can, then you can continue on with your analysis. Otherwise, then you wait for another setup. And so here, when we're looking for places to put our stops, we'll be looking for historically respected micro and macro support and resistance levels, as well as the technical studies as mentioned earlier. And of course, we like to see that there is room to manage a trade. If we have some levels of support and resistance just beyond our entry, then the chances of our targets being reached are perhaps less. After you've entered a trade, it's a very good idea to take a screenshot of the trade and comment the screenshot. When I do this, I take a screenshot normally in the PNG file format, which is a nice small file format. Normally I specify the strategy. Here we have a breakout pullback, the currency pair, and the date, as you can see here. And here we have the second example, level test, the Euro-US dollar, the 28th of July 2013. Now if we have a look at a couple examples here, we can see that price was approaching this, I think this red line here, it's not marked, which is a bit naughty. This is a previous period low, probably a previous week or a previous month low. And so price came up to this level and was rejected, but managed to hold above, but then it was rejected here. And this is interesting. Here we have again a MACD divergence, which confirms a short, where we have prices moving higher, but we have buying interest is declining. When price finally breaks below this level and comes back to test this level, this trade can be entered with confidence, as it moves in the direction that we'd like to trade, as well as in the direction of the divergence. And here I have some comments that explain various things about this precise setup. So this is all very interesting for me. Here we have another example where we have this level here, which is a weekly pivot, judging by the colors. We can see that the price was respected here, here, and here. Price finally managed to make its way below. It came back to test this level and it was rejected, again confirming that this level is sensitive. And then price moved lower, forming new swing lows, confirming a downtrend. And then price came up one last time and had a go at this level, and this is where we sold. Again with comments, some lines, levels respected, and just some general comments about what was going on. And here we have our stop placement, which was placed just beyond one of the deeper Fibonacci retracements. In conclusion, it is very good practice indeed to follow this trading protocol religiously. And following this protocol helps you focus on what you need to focus on. And again, with practice, you'll be doing this, running through this protocol in minutes. It takes me probably 3 or 4 minutes to do all of this. And so it's not a lot of time at all. And if you're trading on the 1 hour chart or the half-hour chart or even the 15-minute chart, this is again quickly enough to enable you to both perform your analysis and make a trading decision before price reaches your level. And last, we have, as we saw in this presentation, some documented trade examples. These are generally a very good idea. But that was it for this presentation. I hope you found the information in here useful. It's probably perhaps a good idea to watch this presentation a few times, and perhaps write down the steps and put them on a piece of paper and maybe tape them to your screen. Then you can follow these through one by one. Anyway, thanks for watching, and I will see you in the next tutorial.